Financial freedom, yeah, that's the goal. Invest your time, invest your soul. Save it, stack it, watch it grow. Generational wealth, Coach Flow.
I want to welcome everyone back to another episode of Generation Investors Podcast. And for those who are new to the podcast, I am Coach Flo. Whether you are a new investor, whether you are a seasoned investor, or you are just wondering about investing in general, this is the podcast for you. Consider yourself by the end of this episode becoming the next generation investor, because I have some gems I want to drop for you. I have some inspiration, motivation. If you stay tuned towards the end, you know how to bring that heat. Okay. And so today we talking about some of the heavy hitters in the AI space. The AI boom is about to really start to take off. The first one, Meta. That's right, Meta. I've been doing my research, and Meta is going to get in the state of Louisiana. They are already having a data center investment. This is a massive move for AI in Meta. So they have invested over $50 billion. That's right, $50 billion in Richland Parish. That's right. The Hyperion Data Center. That's right. The Hyperion. This is a massive data center that's supposed to have a 5G facility. The expansion will be investing over billions of local infrastructure. Okay. We talking about, they said they want to improve the roads, water, wastewater systems. All that is in this particular big, massive deal. And so this right here is looking like a game changer. I'm talking about for Meta. And when I say a game changer, I did my research, and analysts are saying that Meta could shoot its way to 812, between 800 to $1,000 per share. And I do believe that is a very highly likely for Meta, because you got to think about it. Everybody is using WhatsApp. Everybody is using Facebook. Everybody is using the Meta glasses. All that is a part of the ecosystem for Meta. So now you got the data centers that they are going to populate, not only in Louisiana. Look at other places like Texas. Look at other places like Florida. They're going to start to expand across the United States. So this is just the beginning for those data centers that I once have said, and I'm going to continue to keep saying. This one right here, this is not financial advice for you to buy, hold, or sell, but I am going to continue to buy Meta for the long run, okay, for the long haul. Now, you can do what's best for you, but I consider Meta as a long-term banker. That's right. And I'm excited to see the price continue to gradually go up year after year after year. We're talking about the next 5-10 years. And this one right here is going to take us, and hopefully take you. Okay. And so let's move on to Nvidia. That's right. Nvidia. How much I am bullish on Nvidia, just like I am on Meta, because Nvidia is slowly starting to wake up. It had a pullback. Because with the market, the latest news within the market, there's been some sell-offs. When there's sell-offs, we don't panic. Hopefully you haven't panicked, because you have seen red in your portfolio. You might have been down a few $100s, a few $1,000, depending on the size of your portfolio. But if you think long-term, plays like Nvidia will take us where? To the moon and financial freedom. And that is one of the goals that hopefully you are aspiring to do, like myself. So Nvidia has a many breakout. Okay, we're looking for that breakout, and it hit a certain level past like last week it was like 196, 197. It was under $200. I want to say it went down to about 195, and it hit that line, and now we are slowly picking back up past the $200 mark at the time of recording. And it's a lot of people are bullish on their options. For those who are traders out there, shout out to you. I'm still learning on how trading works, but definitely there's money to be made whether you are in individual stocks or you are a long-term investor like myself or you are a trader. Either or, there's still money to be made. Nvidia is that number one play to continue to dollar cost average. That's why I consider myself with this play. And analysts says that this one has the potential to hit that 300, between 300 and 500. I can see more, but they are saying right now this is a buy at the time of this recording. And so I am very bullish on Nvidia. Like I said, this one right here is the one that's going to set up other big companies, and they're going to partner with other big companies as this AI boom continues to unfold itself. And I'm excited. Hopefully you are too. And so for those who are not risky and still considering join this financial journey, get you some ETFs. I have been busy with family and friends and hanging out with them, and a lot of people are interested in investing. And that's why if you are new to investing, get you some ETFs. And this one right here is a no-brainer. Dram, okay? Get you some Dram. This is the best memory chip ETF. All those chips, semiconductors, all these individual companies are in Dram. And that's why I will continue to buy Dram, not just for myself, also for my son, because the demand for data and memory is continues to skyrocket. And that's where our economy is heading. That's where a lot of these sectors are heading. There is data driven. And when you look at YouTube, which you're looking at right now, you are Google searching, you are using data. Everything is using data. Our phones are using data. Any type of social media platform, whether it's TikTok, whether that's Facebook, whether that's Instagram, whether that's Snapchat, all that's collecting data. And so there is a shortage, which creates the demand for the data because there's a shortage of chips. And that's why they're trying to accelerate the development of chips and push out more chips. And so Dram will do well, especially with memory. And so my next ETF that I will continue to add to my portfolio is SPMO. Definitely, I'm looking to open up a Roth between now and going into 2027. Hopefully you do your due diligence on that Roth RA. I consider you to research. Definitely research on Roth RA. I'm working on actually doing another segment on Roth RA, so stay tuned for that. So SPMO, the best momentum ETF. Yes, this is a well-diversified ETF. This also is a dividend paying out ETF. That's why we'll continue to stack positions over time. Like I said, ETFs for those who are looking to build up their wealth and not as risky as individual stocks. Now, like I said, you can do both. You can do one or the other. I got both. I want to stay diversified, and hopefully let me know in the comment, are you buying Dram? Are you buying SPMO? Are you buying Meta? Are you buying Nvidia? Because these plays are going to take us where? To the next level. And so if you stay tuned towards this portion of the segment, you know I got to leave you with some heat. I want to give a quick shout out to Generation Investor Shop real quick, because this is everything finance. If you haven't checked out Generational Investor Shop, I'm going to leave a description below. Everything investing, everything side hustles, everything passive income, everything career development for those who looking to understand how trade works, how when it comes to developing a career and what path to take, Generation Investor Shop has all those guides, manuals, workbooks, worksheets, whatever you can think of. Faith and Finance, Generation Investor Shop. Let's move on to it's a numbers game. That's right. It's always been a numbers game. Whatever sector, whatever job that you work in, it's a numbers game. Okay. Questions I want to ask you. What is your magic number? Because everybody's magic number is different. When I say magic number, I'm talking about retirement. How much do you think you can live off of? How much do you plan to live off of? What's your magic number? Because everybody's magic number is different. Numbers don't lie. Like I said, that this always been a numbers game. It's never going to change. Numbers can always be manipulated at some point, but at the same time, they don't lie, because you're looking, depending on whether you work in sales, whether you work in energy, whether you work in financials, whether you work in healthcare, whatever sector you work in, this is a numbers game. And numbers people tend to look at the results, tend to look at how is the numbers panning out, how is the sales panning out, and that decides on where a company is going to go, where a business is going to go. So think of the numbers. When you sit down and reevaluate how much you are spending, how much you are saving, how much you are investing, how much you are just blowing off, it's going to let you know when you evaluate the numbers. So if you don't remember anything else, think of the numbers. Look at how much you want to consider saving for the next 3 to 6 months in your emergency fund, if you have emergency fund. If you don't have emergency fund, now's the time to start building up one. Definitely now's the time to build up one, because of what's going on in our economy, what's going on in our job markets. All that is things to consider. Let's talk about gotta get cool with being bored. Gotta get cool with being boredom. When I say being bored, I'm talking about the consistency of rinse and repeating when it comes to investing, the rinse and repeat when it comes to savings. All that is a part of building generational wealth. It's not sexy. A lot of these, when you're talking about ETFs, they're not sexy, but wealthy people own these things. Wealthy people continue to buy these things. Okay, so get used to being bored. It's time out for spending your money and blowing your money and wasting your money. It's time out for all that. Now, it's a time to enjoy yourself, and it's not always work, and don't play. But you have to balance between work and play. And when it comes to locking in, I believe now's the time to really lock in. If you are looking to build up your wealth, if you're looking to pay off debt, because there's a lot of consumer debt, Most Americans is dealing with some type of debt, some form of fashion, whether that's credit card, whether that's you have some type of mortgage loan, all that, whether that's dealing with court systems, with child support, whether that's dealing with medical bills, there's some type of debt. And so the question is, what are you going to do to get yourself out of this rut? So you got to get cool with being bored. I don't mind being bored. I don't mind chilling at home sometimes and staying away out of the mess, really out of the drama and out of what's going on around us. So get cool with being bored, rinse and repeat, and just staying consistent with savings, with investing. Okay, and you too will become the next millionaire, billionaire. And then I gotta leave you with ownership is key. Ownership is the key. If you're looking to become a millionaire or billionaire, you got to own something. Own assets, real estate, life insurance, a trust, a will, dividends, royalties, gold or silver, or gold and silver, either or. But you got to be able to own something. There's nothing wrong with renting at times. There are seasons where you have to rent. But it's also, there comes a time where you should aspire to own something that's going to pay you and make money work for you. Because if you sick and tired of the 9 to 5, smash that thumbs up. If you sick and tired of seeing everybody else come up and you still in the same boat, smash that thumbs up. This is the podcast for you. So if you have enjoyed this episode, get ready for the next episode. Like I said, ownership is key. Love God, love yourself, drink water, get you some rest, and start to envision yourself being in the next tax bracket, being in a new place around positive people, positive, like-minded people, people that's going to pour into you. So, like I said, if you have enjoyed this episode, hit that thumbs up, hit that like, hit the subscribe, and I'll see you next one. Peace.